Yeah, thanks, Mike. Hi, everyone. My name is Jukka Alanen. I'm the managing partner at Rebellion Ventures. I'm located in the San Francisco Bay Area, and I came to venture capital from an operating background. I've been a senior operating executive in the software and SaaS industry with over 20 years in leadership roles. And I was on the executive leadership team of three companies and helped grow them to $3.5 billion of IPO and M&A exits. As an investor, I'm personally excited and interested in AI and automation. Then we can talk more about that a little bit later. And excited to be part of this webinar.
Amazing. Julie?
Yes, hi everyone. I'm Julie. I'm the managing partner of Jumper Capital. Before that, I worked for several years on capital markets in Europe. I'm now based in West Africa and Senegal, and I have been an active angel investor for 3 years now. I'm very excited to be here today, sharing my experience and hoping it can be helpful to some of you guys. So thank you again for having me on this panel today, Mike.
Awesome. Ike?
Hello, everyone. I'm Ike Ezean, managing partner over at Beta Ventures. My background is very technical background, startups in Silicon Valley, very fortunate to have founded 3 companies there and sold them. But now really focused on investing in tech companies and based out of Lagos, Nigeria. Really excited about the growing tech ecosystem here on the African continent. A lot of great companies that are being built and sort of the upsurge on the technological side here. And we're seeing some exciting things with love. Really looking forward to chatting with you guys about it and the experiences to participate in them.
And last but not least, Martin.
Hi, I'm Martin Tobias. I'm the managing director of Incisive Ventures, and we're up here in the Northwest near Seattle. I'm an angel investor for about 25 years. I've invested in over 200 companies. I started 3 of them venture-backed, 2 IPOs, raised about $500 million. I'm also an LP in 17 funds, and I'm very interested in vertical market SaaS and health and wellness and the future of technology to really reduce friction in our lives.
Awesome. So maybe we can just go through everybody here on the panel. Maybe we can just start with this opening question here. You know, what inspired you to launch a VC firm? And Julie, maybe we can start with you on this one.
Yeah, sure. Well, so my angel investing experience inspired me to launch a VC fund. I mean, being an angel investor is amazing because first you get to meet a bunch of driven entrepreneurs with solid ideas and accompany them in their journey. Then you get to build your knowledge in various sectors. And finally, you get to meet other angels with wide backgrounds, very different point of views with whom you can debate, share strategies, and at the end, you know, grow even more and learn from them. However, I was doing angel investing on the side, right? So I wanted to be able to have a bigger impact on the startups in terms of capital and time commitment. I mean, there's a large spectrum of very talented entrepreneurs out there, and I wanted to be able to allocate the necessary time to help them scale and see them grow into something big. So really, it's my angel experience that led me to where I am today.
How about you, Martin?
I have a similar experience. I'm a very active angel, but the thing that really changed it for me is that, you know, about 10 years ago, I was a venture partner at a major venture firm, Ignition Partners. And at that time, the way to start a venture firm required you to hire a lot of back office people yourself, a controller, and do all this complicated compliance stuff. And today, through companies like VC Lab and others, you can be a solo GP running a firm, but have somebody else partner and take care of much of the back office of the compliance work, the software. It's actually possible today to run a single or 2-person VC fund with a partner that does most of the very complicated back office things of running a fund. I think that is one reason we're seeing an explosion of smaller funds, is because it's like my idea of what I'm interested in. People have removed the friction to creating a VC fund. by having the ability to buy cloud services and partners that can handle the back office stuff. That's what really tipped it over for me, why I wanted to start a fund now. I have a personal allocation of about $2 million a year to do angel investing. And I figured with a fund, I could make that into, you know, $5 or $10 million and just put more money into companies that I already liked and spend more time with the CEOs rather than the back office as part of venture capital.
How about you, Ike?
You know, I've known for a very long time that I wanted to get into investing and doing venture capital. So I actually went to Wharton, and the objective was to get out of Wharton and then start investing, but the time wasn't right. So I ended up going back to build companies, but I did make my first angel investment 2000 and learned a lot of those hard lessons that you learn in life in terms of investing too early or not finding out the right things. One thing that I did observe is, though, that a lot of my classmates that were from China and India were going back to their countries to have really positive impacts on the economies there, on sort of applying their experiences to the building of their economies and so on. So I was originally born in Nigeria, grew up in the US. So as I started to see the tech boom on the African continent, it seemed like it was a great time to do it. So I came back about 8.5, 9 years ago, started angel investing. And after a while, it just seemed that it made a lot more sense to institutionalize it into a firm and actually coordinate the investments that way. And we just decided that doing it through a fund made a lot more sense, and that has actually played out. And we can add to our money, of course, by the same thing as Martin. We can get people to sort of assist and partner in these exciting things that we've seen.
And how about you, Yuka?
Yes, I came to, as I mentioned earlier, I came to venture capital from an operating executive background. And in the past few years, I started doing more and more angel investing personally myself. And I started especially focusing angel investments around AI and automation, where I was already deep in my operating leadership role. And there are three learnings that I took from over time from doing the angel investing. One was that I was very inspired by the startup innovation that I was seeing on the ground floor with the startups, and the inflection point that is happening in the industry, and the velocity of how companies are creating value and delivering it to customers. So it's very inspired by the quality of startups, the innovation, the opportunities, the inflection point, and that deal flow. The second thing that was inspiring for me was that I saw how these founders and entrepreneurs valued my operating experience and industry know-how and networks, and they were very keen to partner with me closely and help them build their companies. And then a third thing was that I was personally felt very inspired and motivated by being able to contribute to these entrepreneurs with my experiences from the past 20 years and help them be successful. And I felt that at this point in my career, it's very fulfilling to be able to contribute and give back to their success and help them be successful. So when I put all these things together, I concluded that, hey, there's a massive opportunity, there's an inflection point that is very compelling. I can add a lot of value to entrepreneurs, and I'm personally very inspired and motivated by being able to contribute to their success. So I decided to go all in to do that as the next chapter of my career.
Amazing. And everybody here, you know, you're working on such interesting, like cutting edge, like opportunities and so on. So maybe I can just like double click on that a little bit. And maybe we can start with you on this one, Ike, especially with your story about like going back to Nigeria and everything. You know, what opportunities really excite you the most today, and why?
What we are finding is that there are quite a few value chains that are broken on the African continent. Well, I guess broken presupposes that they existed. So they're either broken or they're missing on the African continent. So the opportunities are there to build them, whether it's in health or it's in education, transportation, logistics. But you find that the underlying layer for all these is in the movement of value. So we've sort of doubled down on the fintech side, because you need to be able to move value to sort of pay for the value that's being created. So we're finding that the fintech layer is growing exceptionally fast, and we're really excited by that. The participation that we've had in companies in that space have exceeded our expectations on the return side. We are finding that there is a large bucket that we would call underserved. And underserved comes in sort of these nuanced layers that most people, when you think underserved, you think underbanked or unbanked. It's actually not the case. You have people that are banked around the African continent that have never been given lending or services. And we sort of see that as the layers that have to be built first before you layer so many of the other things that are compelling on these missing or broken value chains. So we think things that are emerging out of blockchain for payments and financial services are extremely exciting, and sort of just constituting that layer that makes a lot of the other building blocks on top possible.
How about you, Yuka?
It's really focused on AI and automation that I'm excited about. And there are three reasons for that. One is that if I compare and contrast what I'm seeing now on the ground floor with startups in AI and automation compared to maybe 5 years ago, maybe 5 years ago, there was still a lot of hype in this area. Now, on the ground floor today with these startups, what I'm seeing is real customers, real problems, real products, and real revenues. And I clearly see that inflection point and the customer adoption and the value creation that is now happening in the world of AI and automations. It's a very exciting time to be part of that. The second thing that is exciting with that is that I believe it can be a force for good. I want to support the positive impacts of AI and automation and the ethical, responsible use of those to help humanity. And I believe there's an opportunity to really elevate how humans work and live through AI and automation. And it's very exciting to be part of that. And then a third thing is that is exciting is the ability to be able to contribute to these entrepreneurs and help them create and capitalize on those opportunities. And especially to help entrepreneurs really revolutionize how we work and live through AI and automation and be at least a small part of making that happen.
How about you, Martin? What are your thoughts?
I think everybody talks today about, Web3 being the future. I'm not an investor in Web3. I don't believe that I've seen a compelling application in Web3. But what I have seen is what I would call Web3, or sort of the next wave of the internet, is what I'm calling building out of the application layer, specifically vertical market applications that solve specific problems built on a strong base of web primitives. So the fact that you've got cloud storage, which has gotten so cheap, cloud compute that's gotten so cheap, you've gotten some APIs that you can get general functionality like AI with GPT-3 and Google's model. You can now build applications which have a capacity to solve a specific problem much faster and cheaper than ever before in the history of the world. And so most of the companies that I invest in are companies that are solving some specific vertical problem using a combination of these infrastructure layers that are now at scale to solve a particular vertical market problem, either in the supply chain, in healthcare, new marketplaces. For example, I was an early investor in OpenSea, which created the NFT marketplace. That was able to be created because you had hosting and cloud services and you understood marketplaces. That was created faster than any marketplace in the past. It didn't take them 20 years like it took Amazon to build critical mass in their marketplace. So that's what I'm excited about, is that you can solve vertical market problems with web primitives an order of magnitude faster than you could in the past.
That's incredibly exciting. Julie, how about you?
Well, to relate a bit to what Ike said, I'm also very interested in Africa and the type of impact you can have there. So for me, the most exciting thing is being part of this growing and blossoming ecosystem, and that gives you, you know, some kind of a sneak peek into the future. And I feel it's a fantastic position to have. So for me, the opportunity of this career shift into VC allows me to somehow contribute with the knowledge and skill set I've built so far in my career in helping shape the future in a positive way in many sectors, some of which Ike mentioned, you know, with some amazing companies and funds who have the same stated goal of making things better for the world. So the opportunity to be part of this is very challenging and super exciting at the same time. And I mean, I feel very lucky because, you know, now when I wake up in the morning and I go to work, I don't feel like it's a task. I'm eager to arrive at the office and, you know, kick off the day. So yeah, this is a super exciting opportunity to contribute in shaping the future in a positive way.
Well, also just the growth opportunity, right? And I think Ike, you mentioned that as well, and in Africa right now, where there's just so much innovation going on, and the way people are thinking about innovation is almost from first principles in many ways, right? Like mobile first is a really good example of that, right? Just, you know, because there was never that layer, and that layer was entirely skipped, right? It's super interesting opportunity indeed. And for everybody here, I noticed there's some questions coming into the Q&A. I'm definitely going to get to them. Upvote them if you find a question that's super interesting. If you have a question for the panel, hit the button at the bottom, Q&A, and then we'll definitely go ahead and lob this over to the panel, because that's literally what we're doing this for. This is for you. So, you know, I just got a couple more questions on my end, and then let's go ahead and go to the questions from the audience here. So, you know, and anybody can answer this. You know, knowing what you know now, what advice would you give yourself if you had to start building a firm from the ground up today? Anybody? Go for it, Yuka.
Well, I think there's actually something that Martin said, and I don't think it's more on the tech layer, but sort of the ability to build a firm is so much easier now than it was like 20, 30 years ago. I remember as I sat down with investors on Silicon Valley at my first startup, and you're wondering, when am I going to be able to build a Sequoia? And when am I going to be able to raise $100 million so I can actually go start investing in companies? And you realize that sort of the platforms are built and they're usable. The cost to sort of run a firm is very low. The tool sets are there. So I would say that the best time to build a firm is yesterday for a lot of folks. And I think if I had the tool sets that I have now, I probably would have done it 20 years ago with my first investment. But I think the tool sets that are available right now are great. And the VC labs of the world allow you to be able to kickstart that process.
I saw you raised your hand as well.
Yeah, so I was reflecting on what advice I would give to people who might be considering starting a new VC firm. And the three things that come to mind. One is to really start with the why. What I mean by that is that you have three stakeholders there. You have yourself, you have the entrepreneurs, and you have limited partners. And I would encourage you to think deeply about why, from the perspective of each of those three stakeholders. Why do you want to do this personally? It's going to be a huge long-term commitment and very, very hard. So you will need a big personal why to keep you going through all of that. So think about the why from your perspective. Then think about the why from the perspective of the entrepreneurs. Why, what makes you unique and differentiated and valuable to entrepreneurs? And then from the perspective of limited partners, why would they trust you with funds? What would make you unique and differentiated and someone who can earn outsized returns for them? What is the why from the LP's perspective? So I think starting with the why, I think is critical. The second piece of advice I would have is that don't focus yet on the how. Sometimes people get too tactical with, how do I set up a legal entity for venture firm or fund or stuff like that? That's a waste of energy and time. And there are folks like Mike and Andrea and the VC lab who can help you figure out the how part as part of the process, but really start with the why. And the third piece of advice I would have is to that really honestly evaluate whether you are truly ready. Are you ready for a long-term commitment that is at least a 10-year fund life? Are you ready to take on fiduciary responsibility? Are you ready to take on a hard, long fundraising process, maybe go a long time without salary? And do you truly, honestly have a differentiated ability to find deal flow or add value to entrepreneurs? Do you have a strong track record? And I think honest evaluation of are you ready, or are you better off maybe building some of the steps to get yourself ready? But that'd be three reflections or three points of advice for someone who might be thinking about starting a firm.
I'm really glad you brought that up, because like the most upvoted question, ironically enough, Yuka, is like, when you first decided to start a fund, how did you go about finding the right infrastructure to support it, right? Lawyers, fund administration, and so on, right? And basically your advice is like, don't worry about that right now.
That's right.
Focus on the things that matter, like speaking with LPs and so on. This is a question for all. This is from Greg. Can you share any thoughts on single GP funds for first-time managers? It seems both very light and agile and ripe with proximity bias and missing the kind of necessary tension to fund multi-GP scenarios. So this is like the age-old debate, solo GP versus, a team-based approach. Any thoughts there? We do have a couple solo GPs on here. If any of you guys want to take this?
I can. I'm a solo GP. I was offered a GP position at a larger firm and I turned it down, basically because I didn't want to work with anyone else. And so I think that gets back to what one of the other guys was saying, which is just figure out your why of why you're starting a fund. Personally, I started a fund because I had a material capital commitment to early stage venture, and I had a lot of friends and people that wanted to invest with me, and it was super easy to do it with a fund. If you are starting it for another reason, that could be different. I was a venture partner at a multi-partner firm, and frankly, one of the things that slowed them down quite a bit was the fact that it was a multi-partner firm and everyone had different interests, and in the partner meeting, those interests had to all come aligned around a single deal, and it was hard to do. So a multi-partner firm might give you additional, hands to look at deals, but it's going to create additional friction. Personally, I prefer the solo idea because it's I'm the largest LP in my fund, and they're my decisions, and people either want to invest with me or not. But that gets back to the why of why are you doing it? Are you doing it to do I have a friend that started a fund with his best friend who they were co-CEOs of a prior company, and they've been 20 years together at the same firm. It just gets back to why are you doing it?
Yuka, you have any thoughts on this? Since you're also a solo GP?
Yeah, I would add that two things. One is that it's also context specific. I think there's a difference between what I would call a small seed fund that focuses on the very earliest stage of companies versus a classical multi-stage VC fund. So I would say, there are the characteristics of the question of solo versus multi-GP structure. I think they apply differently to that seed type of boutique fund versus classical large multi-stage VC fund. So I think that context is important in which you evaluate those, how to set up the right structure. And I think there are a lot of benefits of being able to be agile and fast and focused and specialized in that seed stage boutique model, which might not carry over or apply in the same way in that multi-stage larger VC fund model. The second thing I would offer as a thought is that I think there are ways to force multiply capacity as well as expertise and the collaboration through other mechanisms than necessarily having multiple GPs. So in my case, I have built a sizable advisor network that is quite valuable in terms of both deal flow as well as being able to help and support portfolio companies, whether it's mentoring, advising, or board member type of roles. And then I'm also extensively collaborating with a number of angel groups, angels, as well as other small funds. So all of those kinds of things will help offset, I think, some of the potential limitations of a solo GP model. So I think there are other ways of having that extended, at least virtual kind of team around you without necessarily needing to have a multi-GP structure.
Yeah, so there, in other words, find your why. There's no right way to do it. If you know folks really, really well, as Martin spoke about in his example, that works. You just got to make sure you work with people that you know really well if you're going to partner with folks. Otherwise, solo GP is very viable and works just as well. Question just about your VC Lab experience. I know everybody's gone through the program. What did you find the most challenging? I'd love to hear. I'd love to hear your thoughts about this personally as well.
I found it took a lot more time than I had expected, but that was a good thing. The VC Lab program and having weekly sprints. I had been an investor for 25 years before I joined the VC Lab program, but I had never gone through a structured process to think about the why, the how, the who, and all of those things. And VC Lab had a very structured program, which frankly was a lot of work, but it caused you to ask a lot of questions in a short amount of time. And many people, when they're faced with those questions, didn't want to answer them and couldn't get them done. But if you want to start a VC fund, I would recommend that you do it in a very structured way with somebody like VC Lab, because you will get to the answer of, is it right for you, much quicker than wandering around in the woods by yourself.
I agree 100%. I mean, not here to do marketing, but honestly, VC Lab was a true accelerator, and that term has taken on its full meaning today. I achieved so much in a couple of months, and if I were on my own, it would have taken much longer. And for sure, what's challenging is to keep the pace, of course, and also what the VC Lab force you to do is, in that structure they want you to have your set goals per week or like every 3 weeks. And you just need to make sure that you commit to those goals and that you achieve them.
Yeah, I think the other thing I would add is that sometimes you forget that you are building a company, and just like any company, it requires a lot of thinking about planning and a lot of execution. One of the things that you realize, I mean, if you've built a startup before, is that there is sort of this go-to-market sales cycle that occurs. And I say that's one of the things that probably was unexpected, is that there is a sales cycle that goes on, and there is that consistent pipeline that you have to work with. And as many of the other speakers have mentioned, it requires a certain amount of dedication to get through it. But if you are doing it for the right reasons, it's just work that you have to do, so you're able to get through it. But I'd say that sales process really reminded me that we are building firms. So it's not just sort of a one incident, it's a continuous process that hopefully if you get integrated into the way you do things, you will build a very sustaining firm.
Yeah, I would add that I think there's a lot of value in terms of having structure to how you build and launch a firm, and what is the process to go through, and how do you prioritize and how do you streamline and make that most efficient? What do you really focus on? And I think having a structured process really helps you accelerate building of that firm. I think one thing that I did not maybe appreciate going in was the value of the community and the network and the peer group. And I think that was something I was positively surprised about. But I think that's an important part of that experience. And that helps you in ways that are maybe harder to understand before actually in the middle of that. But I would also add, as people mentioned here, that it is important to really look at that as a significant, intense time commitment and requires dedication, and it requires that big why to really move at the speed required and do all the work, all the hard work that is needed to make it successful.
Thank you so much for all the interesting insights here. You know, I've noticed that there's already 18 questions. So everybody that's in here, please do us all a favor and just start upvoting questions that you like, because we have roughly about 20 minutes left and there's 18 questions. So I'd like to try to get through as many of them as possible. You know, just question for everybody here on the panel, you know, for someone that isn't an angel and wants to become one as a segue to becoming a VC, where do you start? Is, you know, or should they just go straight to being VC? Any thoughts on anybody here?
I'd say honestly that angel investing is a great school, you know, if you want to go into VC. You have so many angel networks that invest in very different categories, and you have a large spectrum. So it will help you define your thesis later on as a venture capitalist. And I think really it's, well, for me, that's how it happened. So I think it's very valuable experience. You get to build your track record. You get to understand how to approach the startups. You get to discover many sectors because your background is different. And so you build a lot of knowledge, you build your network, and all of these elements are very important to be able to launch a VC fund thereafter. So I really recommend that.
I would say,
yeah, I'd also add, you're about to say, Mark?
No, go ahead.
Okay. No, I'd say I'd also add that being an angel, there's something that investing gives you, and it's sort of the ability to make a call on an investment. I mean, it's always easy to play Monday quarterback, and you say, I would have done that, and I saw that deal, and I was going to make an investment. But I think what being an angel does is it actually gets you to the point that you're able to make a commitment and actually put your money on the table. And there are some that you're going to win, some that you're going to lose, but it gets you to the point that you're comfortable getting to the decision point of making that investment. I've heard so many times people that tell me of deals that they would have done, but since it was presented to them, I always wondered why they didn't put in a small amount of money into it. And sometimes it is difficult to make that commitment. And being an angel sort of gives you sort of a chance to try that out before you start doing it with other people's money.
You know, just on a high level, you know, what strategies have been useful in helping, you know, first-time managers, which, you know, a lot of folks here are in this audience, you know, to identify LPs who may be skeptical of emerging managers. And if you have any additional comments on that, I'd love to kind of hear your thoughts as well on that.
Well, one thing you could do, you could read, Forbes published an article last week about emerging managers and how they are outperforming in the current market. I could probably put that in the chat if you want. The data on new managers, how they perform versus traditional multi-stage firms is pretty clear. New managers outperform. So, you know, there's that to consider. And I think everyone should read that article. I'll put it in the chat.
Agree 100%. And there's a lot of data that's been coming out for the last few years, really, that new managers and emerging managers perform really well, and especially in volatile market conditions as well, right? And so that's something you can use as well. But does anybody else have any other thoughts or comments for Nate?
Yeah, I could add a couple of comments. I think there's actually, it's a very rich question, and we could have a, you know, as Mike and the VC Lab team know, we could have hours and hours of sessions on how to think about LPs. The reality is that commonly for a small fund, LPs will be primarily individuals. It is possible to have other types of LPs, but they are less likely, they may be some small family offices or small fund of funds, but it's primarily individuals for a small first-time fund. So then the question is how do you find those individuals? And it goes back to typically you would start with people that you already know, people who know you, and where there's mutual trust, and people who appreciate your capabilities and your knowledge, and believe that you will be successful, and they would be probably the primary people who would at least first join you on that journey, and then you can start expanding from there. So a lot of that starts with from within your own network to get that going, and then you can expand to other people through your own connections, and kind of start expanding that service area.
There's a question here in the chat. This is primarily catered for Julie and Ike here. Can you share your thoughts on venture capital in West Africa? And any sectors that you find particularly interesting? I know you mentioned financial fintech, Ike, but any thoughts? Frank here was mentioning, maybe sustainable energy as a potential one, but we'd love to hear your thoughts as well.
Well, venture capital in Africa, and I'm very much interested in tech, is really the fastest growing market in the world. It's a young market, that's true, versus the US or Europe, but it's really thriving. We've seen a 264% year-on-year growth in 2021 in terms of fundraising for startups. This year, I think we're going to hit a new record. We see a lot of things, of course. I mean, 75% of the money is going towards fintech, but you still have other sectors that are starting to boom, like health tech and agri-tech. So there's a lot of things to do on the continent, a lot of needs, and the key economic sectors in some African countries are moving towards digitalization. So and the impact is really huge in terms of positive social impact. So a lot of things going on in agri-tech, in health tech, in ed tech. Of course, e-commerce. I think we should see those sectors boom in the next 5 years, and maybe have a bit of a shift, and having fintech investments, shifting more towards those sectors.
What are your views?
I'd add that there are some sectors that are very interesting and require more platform approaches to them versus just small plays. So we think about like the logistics environment. When you don't have a network of rail, how do you move things about as commerce grows? Of course, we look at it from the payments side, but logistics is also a very big area. One thing that we actually do see emerging is just pure tech. So technology that's built that is usable globally. It's just that the cost base that you're using to build it is African talent, which an engineer in Africa is less than 5 to 7% of Stanford engineer. So if you sort of have comparable outputs, the cost of technology is significantly less. So you are getting some of these SaaS systems that are built in the cloud that are being sort of sold at a great discount to what an American company would build. So we are seeing pure tech playing as well. But that's really leveraging sort of a large volume of engineers that graduate from universities in Nigeria, Egypt, Kenya, Uganda, South Africa. So it's not just a West Africa play, it's actually across the entire continent.
There's an interesting question here in the chat, and I'm just going to go ahead and paraphrase it. Maybe how do you think about your personal brand, or with regards to the formation or the launching of a firm, or speaking with entrepreneurs and things like that? Any thoughts on branding and how relevant that is to you and your personal firm, and how you're growing it?
I think it's fairly important, but what I've seen is some people try to build a brand around something that's not related necessarily to investments, maybe like political commentary or funny jokes on Twitter or something like that, I'm not sure that that's that useful. What really hopefully builds a brand is, you know, when you are adding value to the ecosystem, or you know, helping people understand, you know, like I just wrote a tweet today that explained my personal definition of what's the difference between an angel round, a pre-seed round, and a seed round. That's a very common thing that a lot of people ask about founders as well as other investors. And when you communicate that out there and help, you know, entrepreneurs understand, oh, well, I'm actually an angel round stage versus a pre-seed stage, and how to talk to investors, I think that helps people start to realize, you know, that you are helping educate the ecosystem. You know, I was on CNBC like 3 times in the last month, and I got a lot of people asking me questions. I was commenting on the Figma Adobe acquisition, and it was just giving my opinion as a 25-year investor on the overall ecosystem. I think you can build a brand if you are adding, you know, new and helpful information to the conversation.
I can't agree more, you know, and, you know, there's like a follow-up question, you know, it's like, how can we position ourselves as experts, you know, and as a result, show the differentiation. Martin just gave you a really good example of that, right? That's a way to kind of do that and also show differentiation at the same time, because Martin's uniquely qualified to have thoughts and feedback on that area, just like, you know, Yuka's uniquely qualified to speak about AI, Ike and Julie about the African opportunity and so on, right? And so that's one way to kind of think about it. You know, any thoughts on sourcing? How do you, you know, the question is, how do you source like the ideal type of companies? Like, what are some things that you do? Any insights here for the audience about some things that you do?
I like to use a lot referrals. So I think that it's very important to build a very solid network, and within your network to have different type of profiles. So you have the angel investing, you have the accelerators for startups and the incubators. Then you have to get to know all the different VC firms that are out there that focuses on your sector, and because a lot of co-investing also can be seen notably in Africa. So building that network is very important as the base. So having this solid base, and then within this network have some referrals that can really, you know, do a first screening of any pitch decks that they can see out there, to make sure that you're going to receive qualified pitch decks. Because we do see, I mean, I really see a lot of pitch decks going through the angel investing networks, but what is hard is to find the qualified ones. So I think referrals are key for that.
Yeah, we actually, or I'd say that one of the ways to do things regarding flow is on the referral side. We take a slightly different approach on the referral side. Since we have deep startup operating experience, we find that we get really excited about mentoring entrepreneurs as they're thinking about ideas, or even when they're not thinking about ideas. They might be working at companies and they're looking for how they build it, but it might not be at the stage at which we invest. So we actually do a lot of mentoring, and I think we do it because our personal brand is that we enjoy building companies and helping entrepreneurs build them. But we also do research. So there might be sectors that we're really interested in, and we want to find the smart people that are building some exceptional solutions in that area, get to know them, see what they're building. So you might find that from the time that we engage with some entrepreneurs, I mean, I've mentored an entrepreneur for 3-4 years before I wrote a check. But I think once he figured out what he was doing, that was an easy check to write. And the company has been fantastic, but he's not the only one. There are quite a few of them that are like that. So we think that if your personal brand is actually adding to the ecosystem, you end up doing those things, and deal flow will come from that, because there is a lot of value in what you're doing in the ecosystem, and the entrepreneurs see that as well. So we end up being the first call and usually the first check.
I would add that I think two things. One is that focus can be quite helpful. When you're more focused on a certain specialty or certain theme, it's easier for you to build deal flow in that area, and also for others to refer opportunities to you, and for you to build the right system to access deal flow, as opposed to if you were just a generic or very generalist investor. So I think focus and specialization helps with that. But the second point I would make is that there's also a significant time investment to build what I would call a system for deal flow. And if you think about that programmatically as a system that you build, and as my fellow panelists talk about the networks that they build, that all takes time and effort. But once you've built that system, then it really produces food over a period of time. So it's really I think a mix of having focus and then building a system intentionally and programmatically.
General question for the panel, kind of what are your thoughts on the future, right? There's definitely been some ups and downs in the market, in the public market, certainly, but everybody here is investing at a different stage in private companies and so on. What are your views? What are your views on the future? What are your views on the future of your market? And it'd be great if everybody here could maybe make a comment or two on this.
I'm happy to comment. I've been investing for quite a long time, like many of these people have. And when I look forward in the next sort of 3 to 5 years, I think this is going to be the greatest time for investing in early stage startups in my lifetime. And it's in part because of all the web primitives that are there. It's in part because of the slowdown in big tech. Many of the great teams and founders are now leaving and starting their own companies. We've seen in America anyway an explosion of company formation. Plus you've got frontier markets, like Africa, just really getting started on a path that we've seen, happen in China and India and Southeast Asia. You've got lots of growth in those markets. In addition, you've got unique technologies which are going to allow people to do things that they could never do before, like the AI infrastructure. I'm an investor in 2 AI companies, and what they're able to do now versus even just 5 years ago, and you look forward and what they'll be able to do 5 years from now, it's absolutely amazing. So I'm super excited to have be deploying capital right now because I think, like I said, it's the best time to support early stage entrepreneurs in my lifetime.
I think you can't really go wrong with closing broken value chain gaps. They're there in ups and downs. They just exist. So the way we look at it is 3, 5, 10, 20 years. If those are the things that you're focused on doing, it's a great time. It's just that the valuation that you're getting in is extremely low now, where it'd be significantly higher. So we're extremely bullish about what's happening on the African continent, especially now that we're putting capital and expertise to closing these gaps. And they're an extremely excited, motivated, driven, smart set of young people that are taking up this challenge. And once you add capital and knowledge and experience to it, we're extremely excited about what we expect to see on the continent over the next 3 to 5 years.
I definitely agree with you, Ike, and I think that there's a shift a bit in how you invest your money and where you put your money. And it's true that venture capital might have been seen as a very risky asset class, but we do see the shift here, and I'm talking particularly about Senegal. People before used to invest their money a lot in real estate, which is something that seems safe. And now it's kind of shifting a lot towards venture capital and private equity. So mentalities are changing, and I think that it's based on everything that's going on so far in the world, and notably in Europe and the US. So yeah, definitely very, very bullish about the next coming years.
Yeah, I very much see it the same way. Extremely bullish about the future for 3 reasons. One is that we are in an extraordinary point in time with innovation and velocity and the impact that innovation can have. And when I think about, for instance, AI and automation, it's just extraordinary the advances that are happening and the inflection point and the benefits to enterprises or consumers that can come out of that. The second thing is that when you think about the market conditions, what I'm seeing with startups is that it's really a very reasonable landscape where it's there are lots of opportunities to have what you could call win-win relationships between investors and startups, and the valuations are very reasonable, maybe somewhat different than what happened in the past few years. And then the third thing is that I also see entrepreneurs currently being very thoughtful about how they build their companies and how they do so in a capital efficient way. And I believe that they are also now building more resilient business models and companies. So I think all of those reasons combined, I think make this a fantastic time.
Amazing. We're running up here at the top of the hour. Everybody here, any final parting word of advice for the folks in the audience that are considering launching a firm here in the next coming weeks and months and so on? Any final words of advice?
Do it yesterday.
Julie?
Apply to VC Lab for sure. That's going to help you. And please make sure you're focusing your time on right stuff that are crucial. I know that sometimes you might feel that, and I'm thinking of fund formation, that this is super important. We need to know ahead of time where we're going to base our fund, but that comes like at a later stage. So don't waste your money on that with lawyers right now till you have like a good number of LPs lined up there. And when you're sure about the size of your fund, because both those elements are actually gonna shape your decision. So, make sure you're focusing on the right things.
Yuka, what are your thoughts?
Yeah, really start with the why. Again, think about the why to yourself, to entrepreneurs, to LPs. And if you have a big enough why, go for it. And then when it comes to the how part, there are folks like the VC Lab that can help you figure out the how part.
Ika, any thoughts?
Yeah, just two. I'd say one, think hard about the problem you're trying to solve. And I think if you can sort of think about that, it makes the journey so much easier. And as was said before, you can start yesterday. And you don't need to think about funds in the sizes of 10s and 50s and 100s. You can think of them in 1s and 2s. And once you start, then you're going. So just first step is what's required in a journey of 1,000 leagues, right?
Thank you so much, everybody here. This was an epic panel. I learned a ton. I can see it in the chat here. The audience was super thankful to kind of have you on. So thank you so much, everybody. We'll be sharing out the recording with everybody later, and we'll see you on the next webinar, maybe as early as next week. Thank you, everybody. Bye-bye.
Thank you.
Yeah.
Bye.